Good afternoon, everyone. Myself, Anjali Nair, on behalf of Kirin Advisors, it's a pleasure to welcome you all to the Investor Conclave Investors Connect Summit 2026, powered by Avinash Mentor and co-powered by Kirin Advisors. Today marks the first day of our two-day summit featuring a powerful lineup of focused management meetings. This is the first interaction of the day is with Yaap Digital Limited. From the management team, we have with us Dr. Atul Hegde, the chairman and MD. Good afternoon, sir. Welcome.
Good afternoon.
And we have Ms. Shivani Tiwari, the company secretary. Good afternoon, ma'am. Welcome.
Good afternoon.
From Avinash Mentor team, we have with us Jagriti. Good afternoon, Jagriti. Welcome.
Good afternoon.
With that, now I hand over the floor to Jagriti. Over to you.
Before we start the section, let's have a quick overview about the company. Yaap Digital Limited is a new age purely digital marketing content and technology company, among the fastest growing publicly listed digital marketing firm. Globally, its unified data, AI powered technology, and content to serve global, regional, and influencer lead brands with 400 plus people across 8 offices in 3 countries India, UAE, and Singapore. Yaap integrated GoZoop in FY26 and it's listed on NSC. With the now, I transfer the floor to the management for brief overview. Over to you, sir.
Thank you, Jagriti. Good afternoon to everybody. So just to build on what Jagriti just said, Yap is a tech-led digital marketing company. We have three broad services that we work in, what we call as the 3Ds, which is design, discovery, and distribution. Design is any form of design that a brand would want. In discovery, it's influencer marketing, where we use AI, we use our own platform called Bazaar, which helps discover content creators, gives analytics on what is the right fit for brands. And the third part is distribution. We are one of the most innovative digital media companies out there. We do programmatic, affiliate, high performance, all of that. And here again, we have added our own AI-led product called Tags, which is actually a media inventory that helps sharper targeting currently on YouTube, and it will move on to all video products. We are about 400 plus people across 8 locations, primarily India, UAE, some presence in Singapore. We work with some of the best brands, a lot of focus on BFSI-led clients. We've been, across winning awards. We've been the happiest place to work for the last 3 years, among the best workplaces for the last 5 years. We've been the best independent digital marketing company for the last 3 years. 200 plus awards in the last 2 years itself. Some of our larger clients include NPCI, which again forms our BFSI base. We work across FMCG, across startups. So again, our client spread is across about 12 to 13 sectors that we work in. So that's to give you a brief start. We are also part of the fastest growing media segment in the country. Digital marketing today is almost 60% of the overall marketing spends in the country, and is also the fastest growing. The overall market is about 175,000 crores today, out of which 60% is digital marketing. So we operate in the fastest growing segment, and within that, the fastest growing is influencer marketing, is targeted media, and that's what we are part of. So that's to give you a very brief thing about us. So that's really about Yap. I'm happy to take specific questions and answer anything that you would have in particular.
Thank you, sir. So participants, the floor is now open for Q&A session. Kindly raise your hand or you can drop your questions in the chat box. Yes, Mr. Miten, you can go ahead and ask your question.
Hello, good morning, almost good afternoon. Am I audible?
Yes, sir.
Yes, good afternoon.
Yeah, so thanks for giving me opportunity. So the first question that I would like to ask is, whom do we consider ourselves as peers? Is it the Ogilvies of the world, or the Lowe or the Leo of the world, the McCains of the world?
So, mostly we do not have a direct peer of our size. But yes, for the three, since I spoke about three segments that we operate in, we compete with different players in each of those segments. So there are international giants like WPP, Publicis Group. So when it, for example, if it comes to the last T distribution, we would fight against a Group M. If it is just about influencer marketing, again, tech-led influencer marketing, very few players out there. Most of our clients buy more than two of our services. Out of the three, they buy at least two. So from an integrated point of view, mostly our competition would be the international giants.
Got it, got it. Thanks for the reply. And second thing, that I would like to ask is, if I see the cash flow for last year that you just concluded, so I see a cash flow to be negative. Could you just elaborate regarding the same? And could we possibly see a positive cash flow going ahead as such?
Absolutely. I think this year is going to be positive cash flow. Cash flows sometimes get determined by collections in the last quarter. So, it's a function of a credit period being extended to a client. But yes, it will be a positive cash flow this year.
Or is it the inherent nature of the business that the advances have to be paid, quite well?
No,
Okay,
no, not at all. So there are no advances being paid. It's sometimes just a week here and there that happens, but most of our businesses work on credit. So there are no advances that we pay on behalf of clients.
got it, got it. So as we just realized, the some of our peers in some sectors happen to be the global stalwarts like WPP and as such Publicis as such. So how do we compete with them? I mean, what is a moat, with respect to these global giants? And I
So
really
the moat
appreciate we
is,
have an Indian brand coming out of them.
yeah.
I really appreciate that.
So the moat is two things. Okay, one is technology-led products. So if you see across our two Ds, which is distribution and discovery, we today have our own, tech products. So whether it's Bazaar for content creation, whether it's tags for media. So that's the first thing. The second one is integrated. Most of these international players work in silos. So somebody does only media, somebody does only content creation, somebody will only work with content creators in the influencer marketing. Very few offer integrated services. And the third is agility. Today, brands want to work with digital first companies like us. These are all legacy companies who have been in offline television, outdoor media, and then in the last 10 years have been into digital. But today, the smart brands want to work with digital first companies, and that's really why companies like Yap have been able to scale up in the last 3 to 4 years. So that's really the differentiator. And the fourth, which is extremely important in today's day and age, is agility. Right? Companies are looking because today consumer attention is very, very low. Right? They don't have time, and these large companies they cannot offer agility. A young startup like Yap, that again is a big differentiator why large clients today, want to work with companies like us.
Got it, got it. So in a way, is it okay to compare? Can I continue if I don't mind? I just wanted to ask.
Yes,
Sure.
sir.
Yeah, sure. Thanks for allowing me. So, in a way, is it okay also to compare, with out of home advertising companies like Bright
No,
Media,
not at all.
or
Not at all.
not at all?
That's,
No,
I mean, not at all. So, it's a
yeah,
completely
pure
different. I mean,
marketing companies like WP.
yeah,
Okay,
I mean, they are like publisher vendors who have their own outdoor. So,
correct.
and we are a pure digital first tech-led company. So,
Got it. So there is another company called as RK Swami. In a way, can we compare ourselves
No, not
with
at all.
them?
Not at all. RK Swami again is very different. It's old age, it's
Correct.
offline, it's been around for many years. So, so currently in the listed peers, we have no direct peer. There might
Correct.
be people who do bits and parts of what we do, but there's
Absolutely.
actually no peer. But I think, I mean, we were the first digital marketing company to get listed. But I'm sure in the next 12 months, you'll have, 15, 20 companies like ours that will come.
Correct. And I also saw recently, I saw a good recruitment from McCann as such into a company as such. And I congratulate for that. And I really appreciate for giving me opportunity to ask over here and wish you all the best. Thank you,
Thank you.
really.
Thank you so
Thank you.
much, Nitin.
Thank you, sir. And next, we have Mr. Chetan Vadia. Yes, Mr. Chetan, you can go ahead and ask your question.
Yeah, thank you. Can you hear me? Yeah.
Yes.
Yeah. Oh, thank you, Atulji. My question is on the three areas of your operation which you just mentioned. What are the initiatives that you are going to take in the years to come in those three areas to create a significant business moat around for yourself, so that what you do is really differentiating with what others, as I was partially aware of, and you also mentioned that a lot of new companies are similar type of companies going to get listed in the stock exchange, and also in the unlisted space we continue to get opportunities with companies operating in the digital marketing space. So what is that knew that you're going to do, which will differentiate yourself substantially from others in the years to come? Okay.
Thanks, Chetan. So I think the biggest differentiation which we have already started this year is building our own products, right? Using tech and AI, building our own layers. So in discovery, which is basically influencer marketing, we have created something called Bazaar, which is our own platform which uses the AI layer to match the right content creators with brands, which gives you lots of analytics on campaigns. In distribution, we have launched something called Tags, which is a more sharply designed, targeted, is currently works on YouTube, will move into all video platforms, which again uses tech and AI to ensure that you get sharp targeting. So as we go on, we will keep launching products across the three services, which will be proprietary. Two products have already been launched in the last 3 months. We'll go deeper with these products, but the real differentiation is going to be a mix, right? It's a mix of what we have built so far, which is real case studies for clients, and how we keep on launching our own proprietary products, which is combining creative and tech is a very powerful media. Very few companies do that, right? They're either doing creative or they're either doing tech. Yap has been doing creative plus tech for the last 7, 8 years now, and we've seen that that's what really gets traction with brands. So we'll continue doing that. First set of two products launched in the next 3 years. This we have a roadmap for at least another 5 to 6 products that are currently under development. With each of these products, there's a stickiness layer that happens with brands, and the final outcome is really what you deliver for clients, right? Can you be effective? Brands today that are spending money to reach consumers, how effective can you be? The more case studies you have, I mean, it's a cycle, right? The more successful clients you have, the more clients you'll attract.
Okay, I have one more question. And if you were to demonstrate, without taking the name of your client, but that for those who may use more than one of your product out of the three, let's say two products, and let's say in the period of 12 months, the kind of traction that they would have seen on the social media for themselves in terms of visibility, in terms of followers, in terms of the sales happening through the, so your impact on the social media for your client is in terms of generating the business, generating the leads, generating the views, or increasing the visibility overall. So in which area you help them the most, and if you can give one or two examples which where your services would have made a substantial difference within your for your
Sure.
client.
So, what you mentioned, right? We work across that entire spectrum. It really depends from brands to brand what their objective is. If it's a new brand that is launching, their biggest objective is awareness. They want their consumers to know that they exist. So that's what we help them with. If it's a direct to consumer brand operating on e-commerce, their metrics could be number of sales, number of leads, number of conversions, right? It really depends on client to client, brand to brand, and we operate in that entire segment. Specifically, to give you an example, this new product that we launched called Tags, which basically gives better efficiencies on YouTube, right? What does efficiency mean on YouTube? Which means that, can a brand get more completed views on YouTube? Can a brand get more engagement on YouTube? And we've seen this product has given anywhere from 40 to 60% uptake on their existing. So if a brand has been running campaigns on YouTube and let's say their efficiencies has been 30-40%, this has actually given them 60 to 70%. So that's a very recent example. The other thing to really see that how effective we are for clients is to see, almost 70% of our clients are with us for more than 3.5 years. For a company that is only 9.5 years old, it's a great testament of stickiness with clients. So depending on the objectives, somewhere it could be brand awareness, sometimes it could be, creating a large social media presence, which means creating a very large community. So once those goals are defined, then it can be tracked and it can be, set.
Fair enough. I take that. Thank you very much. I'll join back the queue. Thank you.
Thank you, sir. So we have questions in the chat box. The first question is from Mr. Vishal. He's asking high debtors of 160 days, plans to bring it down.
Sorry, can you just say that again?
Yes, sir. He's asking high debtors of 160 days, plans to bring it down, and working capital days also went from negative to positive 60 days. Are you taking money before project completion or after?
So most of the projects, there is a credit period anywhere from 30 days to 90 days, depending on the clients, depending on the contracts that we sign. In terms of debtor days going up, I think the right way to look at it is also creditor days. Right. So if we get more credit from a particular publisher, then we would pass it on to a client who then benefits. But the right way to look at it is both. So, what is income and what is outflow. And that's where you'll, really see that. But yeah, it's pretty much going to be in that same area as long as if we keep increasing our business, we get more credit from publishers and vendors, which we pass on to the client.
Thank you, sir. So the next question is from Ms. Sakshi Shinde. She's asking, you have spoken about reaching 2% market share over the next 3 years. Can you help us understand what that means in terms of revenue and how you plan to get there?
Well, if you look at the way the market has been growing, in terms of broad revenues, it could mean anywhere between 1100 to 1600 crores of top line. But these again are not future projections. This is really goals that we want to do. So, which is why we've kept it as a percentage of the overall market. Our growth strategy has been very simple. Okay, we focus and continue doing what we do best. So we will go deeper into the 3Ds. We don't intend in starting anything new. We believe that expertise comes from doing the same thing again and again and again. We have been with the 3Ds right from the day we have launched. Today, we are now almost a decade old, and we will continue going deeper into that. We will integrate more and more tech products, both into discovery, distribution, and design. We will be leveraging AI to create our own products. And of course, unorganic is going to be a huge part. We have even in the past done multiple acquisitions. We have multiple acquisitions in the pipeline that we will continue evaluating good companies. There are lots of opportunities. There are lots of good companies out there, both tech-led, which work in the brand space. So for us, it's going to be a mix of organic and inorganic growth, and that's really the playbook that we have. We will, India will continue to be a strong market for us. Almost 70% of our revenues come from India, and it's also the fastest growing when it comes to digital marketing. So yes, we might at best expand to 3, 4 more cities, India and the region that we are already there in the Middle East. But overall, the playbook is very simple. Focus on what you do best. Focus on the 3 Ds. Go deeper into each of them. Build your own products using tech and AI, and ensure that the repeat rates of clients is significantly high.
Thank you, sir. Next question, please. Sir, we have our next question from Mr. Miten. Yes, Mr. Miten, you can go ahead and ask your question.
Yeah, so thank you for giving the opportunity again. So if we talk to other companies in different sectors, we normally ask, what is the order book or the pipeline as such. So in the case of this sector or this company, how do we assess the financials overview as such?
So, if you look at it, I think the way the media business works is you don't get an annual order from clients. You have contracts that are signed, which will have a typical retainership to it and will have a percentage of media spends, and there are budgets allocated. So it's not that if a client is spending 20 crores a year, they actually give you a purchase order of 20 crores at the beginning of the year. So the best way, when what we use for projections is, we know what the client has spent last year. We typically know that the way the market has been growing, especially in digital marketing, you have an organic 10 to 20% increase that happens in spends, from that particular client. So for our projections, it's really about, when we start from day zero projections, we know that, what we've ended the year, we pretty much start the year with 70% of that. And then the new business engine kicks in, which is both upsell and new business both.
Got it. And if I want to see, last couple of years, the margins have been consistently increasing. So is it something like that we get an operating leverage over here over a period of time, or this is a sustainable margin as of now what we clocked in the recent fiscal
Yes.
year?
So as volumes grow, you have better opportunities to create better margins. Also, as we introduce more of our own products, tags being the first one, bazaar being the second one, again, your margin play there increases significantly. We are still a very growing company. We feel that, there's a huge opportunity for an Indian-led digital marketing network to be built here. So while we have focus on margins and we see margins improving, our prime thing is really that, how we can capture market share as quickly we can in the next 3 to 5 years.
Got it. Is it possible? I mean, since it is an evolving technology or evolving sector, is it possible to estimate the TAM of the sector and how is it growing in terms of CAGR every year?
So yeah, so it's about so if you look at the overall spends, about 150,000 crores today, out of which 60% is digital. Okay, within that 60%, about 50% of the market is our TAM, because 50% goes directly to Google, Facebook, all of that,
Correct.
classifieds, right? So the remaining 50% is really the TAM. And if you look at the CAGR, it has been growing anywhere between 11 to 13% in the last 3 to 4 years.
Got it. And do we can we just know what is the contribution from our top 3 clients or top 5 clients as such?
I think our top 10 clients contribute about, I don't know the exact, but about 65 to 68%.
Got it. And what would be the repeat rate percentage as such?
Again, between 65 to 70%.
That's quite healthy. It looks like.
Yes.
Yeah. Got it. As of now, again, I'll stop and I'll give opportunity to others, and I'll join back the queue. Thanks a lot once again.
Thank you, sir. So next we have Mr. Charanjeev. Yes, Mr. Charanjeev, you can go ahead and ask your question.
Yeah, great. So good afternoon. Thanks for the opportunity. I have few questions. First, a follow-up question regarding the previous person asked. You mentioned that your top 10 clients have 65 to 68. So can you throw some light how much would be top 3 or top 5? So is it something skewed?
I'll have to come back to you, Charanjeev. Offhand, I wouldn't know. I mean, we really look at it as a bunch of top 10 clients, but I think top five should be about 40 odd percent.
Okay, that serves the purpose. Approximation will do. And sir, during the current years, like, for example, for last let me put it up this way, calendar year 26, how much would be the attrition in the company?
Oh, our attrition is very, very low. I mean, just to give you the industry average, attrition is about 23, 24%. I think ours would be, maybe 12, 13. I don't know the exact number, but, it's half of the industry average.
Okay, that's why this concern, no, because this type of industry currently attrition rate is quite high. That's from where I was coming.
So
Sir,
if you look at our
yeah.
senior management, it is the same from day zero. So for the
Mhm.
last 10 years, it's the same senior management.
Mhm. Since we have time, may I request you to share a bit about yourself, your background, and how you started this business? Basically, what promoted you to come into this business? What was your background? What you are doing prior to this?
Sure, Charanjeev. So basically, I've spent more than 30 years in in advertising and marketing. I was part of India's first digital marketing company almost 22, 23 years back when digital marketing had not even started in India. So I have almost 2 decades of exposure primarily into digital marketing, right from the time it started in the country. I worked earlier on, I worked for a French giant called Havas. Worked with them for almost a decade, then went on to be part of this digital marketing company, which was an Indian homegrown company which had investments from various various players. And then in the last 10 years is, when I started Yap with a core group of people who were part of the previous organization. So, but yeah, so overall, I've spent almost 3 decades in digital marketing. I'm part of a lot of industry bodies. I've seen this industry evolve from 0.0001% spends of the overall advertising spend to 60% of the overall. Today, it's the lead medium. So I've really seen the evolution of how digital has happened in this country. I've been part of some of the most important junctions for digital marketings. I'm active in our industry in terms of associations, bodies. I write regularly. I have a column in Khaleej Times in Dubai. I've been part of multiple awards in juries across. So yeah, so almost 3 decades in this line.
Okay, that's what I wanted to understand. Thank you very much. Wish you all the best.
Thanks a lot.
Thank you, sir. So we have a question in the chat box from Mr. Sakshi. She's asking on the GoZoop acquisition, could you share what progress you have made on integration so far? Are you already seeing any cross-selling or cost synergies?
Absolutely. So our third D, which is distribution. So Gozoop, when we acquired, one of the reasons to acquire Gozoop is, of course, great company, great founders, but two of our Ds out of the three, which is distribution and discovery, something that Gozoop doesn't offer. So it gave us suddenly a base of 100 plus clients where we could take our existing services to. Both these services are now integrated in Gozoop in the last almost 10 months now. That we have been working. Internally, we have a 22 to 25% extra revenue to be generated across both companies for these two services across existing clients. We've already seen significant traction in the distribution part of it, which is the media part of it. Now, which is the launch of Bazaar, which is our content creation platform, we also feel that there's going to be huge traction in terms of content creation. But yes, Gozoop primarily these two services. And from Gozoop's side, they have something extremely interesting called Hawk, which is almost 50% of Gozoop's business. Hawk is is a very sophisticated online ORM service that they provide, which is now also becoming into a product. So Yap in its part has taken Hawk to most of their clients And we feel that again we will be able to do about 8 to 10% new business for Hawk from Yaap set of clients.
Thank you, sir. So we have next Mr. Ashish Soni. Yes, Mr. Ashish, you can go ahead and ask your question.
Sir, you said that you want to get to revenue of almost 1100 crores in 3 years. So can you give breakup how much can come from organic and how much from inorganic? Because you spoke about acquisitions also.
So Ashish, we have not put it down to hard numbers saying this is what organic, this is what inorganic. But if you typically see our last 5 years of journey, it's almost been about 60% organic, 40% inorganic. So give or take, depending on market opportunity, depending on what is the kind of, assets that we'll get to buy. So we don't have a hard and fast rule saying that this is what we want to maintain. As I said, still a very young company. For us, it's really about building it right. And if tomorrow there is a very large asset which fits into beautifully into what we do, we'll go after it. And because the base is so small, the percentage will always this, right? But the way we have functioned from day one is, there's a team that focuses on inorganic. There's a separate team that focuses on organic. Both of them have their target, and pretty much, we've been on track so far.
And how do you acquire new customers? Because you have a lot of dependencies on the top 10 customer for your major part of the revenue. So how do you against the competition? Because competition you said are the bigger players, right? So just can you how do you approach that?
Yeah, so Ashish, first of all, thing in our business, dependency on few clients is actually a very positive thing, right? Because we are able to give far more attention, we are able to go deeper into that client's wallet. So more larger clients you have, the better it is for that organization. It's not like some other businesses where you suddenly have a high concentration risk saying, oh, only 10 clients contribute. So in our business, it's actually the opposite because you do not want a small team to be focused across 500 clients, right? That's really not it. Till we transform into having most of our products which is self-service, tech led, that's when that happens. But in our business, which is primarily tech and service business, concentration is actually fundamentally very important. More importantly is what is the number of years that these large clients have been with us. And in our case, it's almost been 5 to 6 years of retention when the average retention is 3 years across our own client buckets. So that's the first thing. How do we go and this? So business comes to us in two manners. One is pure. I mean, today Yap has reached a brand where in a month we get about 10 to 15 serious inquiries, right? And if we decide to participate in that pitch, our pitch conversions have always been anywhere between 50 to 60% of what we participate. We also have a dedicated new business team that works, purely on large accounts, reaching out, building relationships, going and talking to them about products. We also are extremely active in the industry forums and industry events. So whenever there is a marketing conclave, whenever there is a CTO conclave, whenever there is a Martech conclave, chances are that somebody or the other from Yap is speaking there or part of it. So it's an all-round effort for business. But we've seen, it has to be a healthy combination of existing clients recommending you to others and your new business team going and developing and opening new doors.
And acquisitions are typically challenging. So when you said 40% is acquisition, your ballpark you want to. So how do you ensure the acquisition goes off well? Because it's not straightforward any time.
So Ashish, there's no way to ensure it other than keeping your basics right, and we have done that so far. Right. Most importantly is the company fit into what you're doing. Right. The company client list, how long they have been with those clients have been with that company, and outstanding founders. Right. See, one of the unique things about Yap is whichever companies we have acquired so far, all those founders continue with us even after their acquisition has been complete. So we have integrated the founders into our business. So Ashish, it's always a mix. There is no hard and fast rule saying that this is really this. But in our business, we've seen that if the business fit works, if the founders are somebody that you will be working with for the next 5, 7, 8 years, most of the cases it works.
Can you give an example of a customer which is your top 10 customer, how you acquired them initially and how did it scale up, just for everyone, which you are proud of?
I mean, let me give you an example of two clients. One is Dubai Tourism. It's the world's largest tourism board. They had come up with the global tender about 8 years back. We were maybe 9 years back. We were just a year and a half old. Okay, we had no business to be even in that pitch, in that room. We managed to break our ways in, and today we have retained them for the last 8, 9 years, right? And we continue doing some of their largest projects in influencer marketing. Again, unheard of, to have such a small agency at that point of time be part of this. But we did that. In India, there are many examples. NPCI, we started working with them even before it was day zero, even before they had launched UPI. Across the journey, we have seen from educating consumers how to use UPI to UPI safety campaigns and then into various products of theirs. Again, that's been a 7, 8 year journey for us. So across, so in most cases, we are the surprise factor. We used to be the surprise factor because we were so small. People never expected us to deliver the kind of work that we are doing. Today, it's really been about, we are now choosing who we work with, how much attention, because we know that more attention we give to existing clients, that's the fastest and best way to grow.
Any particular names you like to acquire, customer names or logos, because your wish list might be there that this or two, three customers I would like to acquire. Anything, names, any high level or industry at least?
Yeah, so sectors, we don't go by this, right? So there are some sectors which we call as foundation sectors, which traditionally spend a lot irrespective of the marketing environment. So it could be auto, it could be FMCG, so again, high sectors which for them advertising and marketing is a must, those kind of things. And then the other sector which we think found it very interesting is really set of startups which we know that in the next 4, 5, 6 years will really grow and we will grow with them. So when we look at the kind of businesses that we go after, there are two buckets. One is the foundation sectors, and it's generally auto, FMCG, telecom, consumer electronics. That's one set. Then there are another sets, which can be very interesting. Like for example, travel and tourism. We have a lot of experience. We've seen brands grow over a period of time. Startups across from fintech startups to consumer startups. If you are with the right team, and if that company grows, then the returns are exponential.
Okay, sir. Thanks and all the best for the future.
Thank you, Ashish.
Thank you, sir. Participants, due to time constraint, I request all participants to limit their questions into one or two, and we have to close this call at 12:55. So, sir, we have next Mr. Ashish Soni. Yes, Mr. Ashish, you can go ahead and ask your question.
I'm done. I think maybe I have to raise, lower the hand.
Okay, sir. Yes, Mr. Charanjeev, you can go ahead and ask your question.
Yeah, thanks. One thing which I would like to ask you or would like to understand, you might not be able to give the exact numbers, that once the business gets better with your recent acquisition, it mature a bit, say FY28, how much would be our operating profit margin?
Operating profit margin from that particular acquisition you're talking about, or the
No,
overall?
overall as the company level.
See, I think we've not put a particular number in terms of operating margins. If you see, our operating margins have significantly increased from last year to this year. I think in a 3 year window, we would want our operating margins to increase anywhere between 20 to 40%. But there are lots of factors to this, challenge. If 1 year we have an heavy acquisition, which is actually a forward-looking acquisition, then the margins might come down. But yeah, our goal is really, to be in that range in the next 3 years.
Okay, cool. Thank you. Thank you very much.
Thank you, sir. So we have one question in the chat box. As larger global agencies continue to dominate the market, where do you think Yaap has the strongest competitive edge today, and what makes clients choose you over those players?
So two very important factors here, right? The Indian advertising market is very, very unique, unlike nowhere in the world. Almost 90 to 92% of the entire market is controlled by foreign players. This is unlike anywhere in any sector. And most of these foreign groups, whether it's WPP, whether it's Publicis, have been, whether it's the Japanese networks like Dentsu, they have been built by very nationalistic programs, right? All Japanese companies work with a Japanese agency. All Korean companies work with a Korean agency. All American companies work with an American company. And that's how in the last 100 years, these networks have grown. I think now the time has come really for Indian brands, who are now going global. They're becoming bigger, and somewhere there is a realization, and that's also how the country is progressing. There is a realization to really work with Indian homegrown companies to have more Indianness in that. We feel that as we scale and as options for scalable Indian independent companies are going to be looked upon, Yap is going to be a player of choice. So that's something which is happening in the background. It might take 5, 6, 7, 8 years. We don't know, but it's a very, very important trend in our industry where we want large Indian homegrown companies to work with large Indian homegrown companies like Yap. So that's that's one big thing. Other than that, we've been consistently winning businesses, in front of these networks. As I said, clients today want to work with digital first companies. Clients today want to work with companies that give them the best of tech and creative, and they want to work with companies that are agile, that can, service them, can have their needs, because today the consumer interest is so, attention span is so less. You no longer can have legacy ways of working. So a young upcoming company that leverages tech and creative will always have an advantage.
Thank you, sir. So we have next Mr. Mithun. Mithun, sir, I request you to limit your questions into one or two.
Yeah, I'll cut it to two if it is fine. Yeah. So thanks a lot for giving the opportunity again. Having worked in this industry for almost 2 decades, what are the kind of threats or risk do you foresee in the sector per se? I mean, one of the thing which I can visualize is the WPPs of the world, the Publicis of the world. Why can't they open up a they for sure they will be having a vertical like this. Why can't they dominate going ahead? And so if I can just highlight on the threats or risks.
So they're already dominating, right? As I said, combined almost 90% market share. You can only go down from there, right? The challenge has been that there has not been enough independent companies like us that has been building scale. So it's, that market is not defendable. So there's a large market for us to go and grab, and we are seeing that happening today. If you even look at our portfolio of clients, there are large clients which would have not typically worked with a company like Yap 10 years back. Right, and today that landscape is changing. As I said, digital first companies, who are leveraging creative and tech are far and few between. So that is something that, today new age clients want to work with, and even the older clients, who were not moving today want to work with digital first companies. So that's a huge sector benefit in which, Yap is going to benefit a lot. In terms of threats, I think any normal threats, like when COVID happened, we thought that would be a biggest threat, but we suddenly saw the advertising pie sank, but the digital pie actually doubled, right? Because anytime when there's a crisis, people remove money from television, outdoor, print, and they put into digital because digital is far more trackable. Right, and it actually, if you look at during the COVID times, in those 2, 3 years, all digital marketing companies doubled. So that, so for us, normal business threats would be anything that would happen, like a war situation that would be there. So any of thing that would come, in an unforeseen thing. But otherwise, if you look at the CAGR, if you look at how the industry has been growing, and digital marketing is only going to take more and more share out of the other traditional ways of this. So for an overall sector, I don't see any real challenges unless there is, things like war that we have not accounted for.
Got it. So my last question, I would end it over here basically. So we have been acquiring companies for a while. Have we been offered being the acquired company by the large force of the world, the Ogilvies or the Leos or the PPs of the world?
Many times with it. So throughout our journey in the last 10 years, we would have got more than 10 such opportunities across networks who would have loved to acquire us. Not only even some of the consulting giants over a period of time, but we've been very clear that, it's still very, very early days. We are still very small. I think the opportunity to build a world-class Indian network, homegrown, is massive. It's never been better. And that was one of the reasons to go public and not get distracted, becoming part of a large network. I mean, that would have been the easiest part for a Yap. Any large network in the last 5, 6, 7 years would want to acquire somebody like us. But yeah, our path is very defined. We feel that in the next decade, we can actually build the next WPP out of India. Not in the current model that they are. I'm talking about in terms of scale and presence. And that's what we really want to do.
Thanks, Lord. I really appreciate, and I hope to see the WPP of India from Yap as such. Really appreciate
Thank you
and wish you all the best.
Thank you so much.
Thank you, sir. Sir, I think we have covered majority of the questions. So if there are no further questions, can we conclude the session?
Yeah.
Thank you, sir. Thank you, ma'am. Thank you, Jagruti. Thank you, participants, for your time and participation. If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, Atul, sir. Thank you, Shivani, ma'am. Thank you, Jagruti.
Thank you.
Thank you.
Thanks.